Welcome back. Welcome back. It's August the 7th. And we're here. We made it. Made it on board. Okay. Still alive and well, as they say. All right. What a weekend. Hope everybody had a great weekend. Happy Monday, everybody. A little bit rainy here on the East Coast. Nice and cool, though. It's so nice. Wonderful weather. We have such a wonderful weekend here. I hope you're having wonderful weather where you are as well. On the East Coast of the U.S., it's beautiful. Okay, so sorry about a little bit of technical difficulty, a little bit late starting, so we'll be finishing a bit late as well. Um, so let's begin. Um, First of all, let's start off by saying I was wrong. So Ed has to wear the dunce hat. There was a pretty big reaction to the non-farm payroll on Friday, and here I went through this whole spiel on Friday about how the non-farm payroll reactions were the days of the big reaction to the non-farm payroll were over, and just like that, they weren't over. So, um, so it would seem. I felt very confident that putting the stop at 167.30 would be very safe. And here, this shot up as high. Let me get this on the screen. The high was 167.22. So the price actually came within 8 pips of the stop. It was a 200 pip stop, and the price came within 8 pips of it. So that was quite foolish and quite a mistake. And so the stop wasn't hit, which is good, but that doesn't mean. But I was still wrong. It was still a mistake. Just because the stop wasn't hit does not mean that it was not a mistake. It was a mistake, and that's definitely a mistake on my part. So uh, that's where I should have entered. And I was saying originally, hey, that might be a good place to enter up along that trend line. But then I thought, hey, it would be okay to enter, here because the days of the big move on non-farm payroll are over. And besides, this is not even a USD pair. And then what happens? 200 pip move on non-farm payroll day. Um, I was I was wrong. And lucky, quite frankly, not to get stopped out would be the case. So that was on the 3rd, the 4th, and then the 7th. Right, we get the big. The 7th is today. So anyway, basically the position is break even at this point. Right. So take a look at Euro USD. Euro USD going to first. We get a pullback from non-farm payroll, but is it enough to get to our entry point? So yeah, anybody can make a mistake, and that's one of them right there. And look at that, it does work. There's the non-farm payroll pushes Euro USD right down to the 10-day moving average. How sweet it is, right? So that's not entering prior to non-farm payroll. That's after non-farm payroll. Um, and let's go to the 5-minute to get the timing on this. So we had talked about entering on that 10-day moving average for a long time, but it seemed like the price just did not want to come down. And the entry was 117.52. But let's go to the 5-minute. Chart, and we'll see. Let's take a look at that non-farm reaction. Any day now, TradeStation, any day now. Any day now. Okay, so there's the big dive on non-farm. It does come down pretty nicely, doesn't it? It looks very, very quiet. You see the small candles. I can get rid of that moving average right here for a minute. So you can see the candles are very, very small. And then right around it, you're hanging around 118.80, and it's going to drop about 140 pips to 117.40 before it finds its footing. And the plunge, it begins, of course, the volatility begins around 8:30 a.m. Eastern time. That's right around the time of the release. And it keeps going. You can see that we really kept going for quite a while, for about 2 hours, and then it just stops. The highest volatility, and then it just stops, and things evened out. But it just kept going until it found that 10-day moving average. It's almost as if, it's when you're looking for something like the 10-day moving average, and then you see something like this where it just keeps falling until it hits that 10-day moving average. That's how little conspiracy theories may start in your mind, but it's really not worthy of that. There are other news items that occur, not just non-farm payrolls. And then you can see things even out, and then the market gets quiet again. But it's a couple of hours of reaction, but we did have a very healthy reaction on non-farm payroll day, for a change, right? And that was the funny thing is, was it really that strong of a report? Well, we'll take a look inside the report and to see. But also, dollar Canada is another one where we've been looking at. But dollar Canada days ago broke through that 10-day moving average. Just in case you were still thinking about this one, that broke several days ago, so it's no longer in consideration for the 10-day moving average. If you took that trade on the 10-day moving average, it obviously didn't work. And that's a shame, but they can't all work, and it's unfortunate. Our old friend Aussie yen, of course, was spectacular, but all good things come to an end, and Aussie yen collapsed through the 10-day moving average as well. Aussie US dollar, right, also collapsed through the 10-day moving average, although this was never one that we never really considered this one to be. I only really see one bounce off of the 10-day moving average, so I never really considered this one to be a 10-day moving average support type trade. It just wasn't in consideration. Okay, all right, so there's AUD USD. Okay, so dollar itself, let's go to the dollar. Right, dollar had a good day, a very good day. But will it continue is the question. The trend is not broken. You can see the 10-day moving average on the dollar index itself. This is the US dollar index. And you can see the 10-day moving average is very much in play here on the dollar index itself. Not surprising, because the dollar index and the Euro USD are inverse. Okay? So if the dollar index is running down its 10-day, then Euro USD is running up the 10-day. And so Euro USD is now in play and has hit its 10-day. So anyway, congrats to anybody who caught that after the fact. Let's take a look inside the report. because is this going to touch off a wave of dollar strength is the question, or is this a temporary thing? You know, this is a big green candle inside of a trend of dollar weakness, but I see a lot of green candles in here. And these other green candles, admittedly, were not as big as this green candle, but none of these green candles changed the trend, right? None of these other green candles caused the dollar downtrend to turn. Now, a lot of people said, okay, this was a good report. It was stronger than expected. And if you look at the report, more jobs were created than expected. This is true. However, is it as good as it appears? There's one way to find out, and that's to go inside. So that's what we're going to do now. Let's go inside this report and see if it's as good as we believe. Here comes the non-farm payroll report from the Bureau of Labor Statistics. We'll take a peek inside. And we're looking at Table B, establishment data. Let me get all this junk out of the way. Now, we know the expectation was not 209,000 jobs, right? We know the expectation was considerably lower than that. I think it was 173, something along those lines. But the first thing I look at is the number right under 209 is 205 for total private. Why does that matter? Let me see if I can blow that up a little bit. You know why that matters? Because that tells me that this was not artificially inflated with government jobs. Private sector created 205,000 jobs, and that's good. So, by the way, the expectation was 182. Okay, so that's a good thing. I also would say this, that the revision was quite nice. See that 231? That's the revision of the prior month. That was revised upward. I'm not sure how great of a revision that was. Right, but it was clearly revised higher. So far so good. So what this tells me is only 4,000 of these jobs were government jobs. And here you go. There they are. 4,000 government jobs. And that's good. You don't want a lot. Too many government jobs means, look, you can create, at the snap of a finger, you can create as many government jobs as you like. So padding with government jobs is not necessarily good. The other padding is temporary help. Padding with temporary help is negative because if employers really had confidence, they'd hire full-time, not temporary. There were about 15,000 of these jobs were temporary help. That's not great. Really, that's about the distance of the beat. We beat by about 20,000. They beat expectations, no, maybe about 25,000. But about 15,000 of them were temporary. So you really don't want to see temporary jobs. It's not really a good sign of confidence if you're hiring temporary. Okay. Now let's sift through this very quickly. So we'll say that it's a positive that we didn't hire, that these jobs are not government, but not necessarily a positive, but then +1 because they're not government, but a -1 because because a decent number of these are temporary. Now, +1 because they're not retail jobs. We know that retail stores are closing their doors like mad. True in the US, and I would assume it's probably true elsewhere for my friends overseas. Let me know if that's the case, but in the US, retail is closing its doors. So I'll give you a +1 because these are not retail jobs, which are not high-paying jobs. But then I'll take a -1 because 62,000 of these jobs are leisure and hospitality. Now, the unfortunate thing is this leisure and hospitality sector has been a big job creator every month for years now. And why do I say that's unfortunate? Because you call me crazy, but you can't have every single person can't be a waiter or a bartender. Does that make sense? You can't have everybody waiting tables and tending bar. Fair enough? Okay. We got to be able to create higher quality jobs. So leisure and hospitality, not necessarily high quality jobs. Retail, not high quality jobs. I'll give you a +1 because we did not live on retail jobs, but I'll take that +1 away because we have too many jobs in this category. It's always good to have jobs in healthcare and social assistance. It's always good to have jobs in education and health services. These areas are always strong. Professional and business services is picking up steam. This is good. That's an area that should always be strong. Financial activities, oh, this is an area that used to be strong. It's pretty soft. Let's see where else we can find. Manufacturing. Remember, we were going to bring back manufacturing jobs. 16,000. I got to say, that's pretty good. A lot of months, we used to have minus signs in front of that. So I'll take it. Construction, 6,000. We've got to do better. So I'll give you a +1 for manufacturing, and I'll take it away for the construction. You see how this is working mentally here? So right now, this is not that impressive of a report. It's not bad, but it's not good. Every time I see something good, every time I see something positive, I'm seeing something negative that balances it out. It's not a bad report. It's not an outstanding report. It's just a chugging right along kind of report. Transportation and warehousing. You know, if all the stores in the mall are closing, why? Why are all the stores in the mall closing? They're closing because everybody orders everything online, correct? If everybody orders everything online, then all of that stuff has to be warehoused and transported. If all that stuff is warehoused and transported, how come more jobs are not being created in this sector? And if the jobs are falling off in this sector, is that a very bad sign? I got to keep my eye on this. Got to keep my eye on this. If transportation and warehousing starts to lay people off, does that mean the economy is going to go into a tailspin? Very possibly. Okay, I have to keep my eye on that. Okay. All right. So, all in all, I would say a good but not great report. A little too many on the bartending and waiting tables area. I will say this. Average weekly hours is creeping up. Last month we jumped up to 34.5, and this month we held it 34.5. That's good. You want to work more hours. You want to have more hours worked. Average hourly earnings, again, creeping up from 26.22 to 26.27 to 26.36. Now, this is very slow increases. But this is what the Fed says when they say we think we see wage inflation down the road. They believe it's going to increase more quickly. They always think they see it coming, but it never comes. It's important to understand that. They've been saying this for years. We see wage inflation down the road. They've been saying that for like 5 or 6 years now, and it never gets here. But they always see it coming. It's coming very, very slowly. And then in dollars and cents, I guess you multiply 34.5 times 26.36, you're going to get $909.42. That's your earnings for the week. I believe that includes, you see, the thing that is really going to skew people is the cost of health insurance is skyrocketing. And I don't believe they're including that in their inflation statistics. You know, healthcare is increasing by like 20% annually, faster than that in some places. So, you know, the numbers could be quite skewed, right? Anyway, this is what it is. What it is, isn't it? And so we have slow inflation. I would say this is a pretty good report. If you can just keep this up every month, I think you're in good shape. But the quality of jobs has to improve. And this is something we've been saying that for years. Now, here's the problem. And you're never going to get around this problem if you don't do something about it. Because there's so much automation coming on the way, so many of these jobs are going to be automated that if you don't have people trained to handle more highly skilled work, then many of these jobs are going to be obsolete. So that's the thing that people have to deal with. But that's a different problem for a different day. For now, I'm going to say this report's pretty good, but I don't think it's enough to turn the dollar around. I think it's pretty good. I don't think it's great. You know, is it enough to stop the dollar's decline? I don't think it's, I don't know. I mean, is it enough to turn this whole trend, to downtrend into an uptrend? I really don't think so. It might be enough to stop the dollar from being in a free fall, perhaps. Perhaps it's enough to stop the dollar's free fall, which would be a shame if we just bought EURUSD on this dip. Right? But we don't think about that. We just go, hey, the trend is your friend until it ends. And you look at the chart, technically speaking, you look at the chart and you say, this was resistance, EURUSD broke resistance, and it could go a lot higher. It could go a lot higher. Look at that. It could go all the way up to here. It could hit some resistance in some turbulence in here, but it could go all the way up here. Now, I don't know if it's going to ride the 10-day moving average all the way up to there. Right? That would be extremely fortunate if that were to happen. It would be very fortuitous if that were to happen. I don't know if that's going to be the circumstance. However, you know, it could happen. All right, it could. Anyway, now we know all about the non-farm payroll, how it happened, what's inside. And I think a lot of the criticism that I've been reading also over the weekend was this, that, you know, those jobs, those waiter and waitress jobs, those are part-time jobs. They're not full-time jobs. And companies are very reluctant to hire full-time, because if you hire full-time, you have to provide health care, and this is a big issue. Healthcare is very expensive, so they hire part-time. And that's why the U.S. economy is very good at creating part-time jobs instead of full-time jobs. And this is something that has to be fixed. Okay. All right, let's get back to work here. What about the British pound? British pound has taken quite the nosedive. And it's a pretty spectacular move. After hitting 132, it's really fallen off the cliff. We have this formation is very interesting. Maybe you've heard of an evening star. This is almost like an evening star with a pause in it. We have the strong move up, the strong move down, and in between there's usually one candle like a doji, and we call that the star, the evening star. Here there's two candles in between, but the result was the same. Broke down very badly, and whoops, we don't want to remove that. We just want to remove the darn moving average because we don't need it any longer. And just a plunge, certainly non-farm payroll played into that, but it wasn't the only factor at work here, right? Very sharp move on pound. But is there going to be a reaction here? There's so much politically going on with this, and it's frankly it's hard to keep track of it all. As a person in the U.S., you really have to work quite hard to keep track of everything involved here. But technically speaking, you want to look at this in terms of where is support. I was drawing my trend line like this, and I would say this is coming through the trend line right now. Now, this does not mean, some people are going to look at that and they're going to say, oh no, it broke support and it's going to keep falling. Well, sometimes they come through a little bit. They overshoot because of momentum, and it may come back. It may come back up here. Just 2 hard days down. So I'm not going to touch this right now. I'm just going to sit by and wait and give this a moment to sort of breathe, to let it catch its breath, because I don't really see a very clear and obvious entry point here on British pound, but I do find it intriguing that it's come down so much in the last couple of sessions, that I wonder if it's oversold at this point, and if it just might be due for a pullback. There's a huge round number not far away, but I don't really see a support level there, right? I don't see anything here that I can lean on in terms of technical analysis. There's no trend line. There's no obvious support level that I can use at one. There's a round number and nothing else, unfortunately, that I can lean on there. So that's all I've got right there, and that's not enough. That's not enough. It's just simply not enough. So I can't try to force this trade. If I'm going to simply buy this at 130, I'm forcing the trade. There's no real obvious pattern or formation or candlestick pattern, anything of that nature that I can lean on at this point. So I'm just going to let this breathe a little bit and let this thing find its way. I want it to prove to me that it's not going to continue to plunge before I start trying to find some sort of a reversal here, because I still believe that the pattern is moving higher. It's higher lows, it's higher highs overall. I still consider this to be moving up, but that's a pretty brutal move lower. That's definitely a punch in the gut to anyone who's long. And I would be, certainly if I were already long, I would be thinking of, I'd be having second thoughts at this point. So I'm not ready to dive into this right now, but I just want to draw your attention to that. It is a stunning move lower. It really is. And startling, quite frankly. Okay, so we've covered the non-farm payroll in quite a bit of detail during this session. And when we come back, but that still leaves quite a few other pairs and quite a lot to discuss coming up for our next session. So I hope you'll join in about really about 25 minutes from now, we'll be starting up for our next session, so I hope you'll join then. So until then, this is Ed Ponsi saying thank you for listening, and I'll speak to you again in about 25 minutes. See you then.